Trade tensions stalled momentum in Canada's economic growth this spring and put a chill on business investment, hiring, and consumer confidence. Now, for more on what the summer holds, we are joined by Dawn Desjardins, Deloitte Canada's chief economist. Thank you for joining us, Dawn.
Thanks, Anne.
So what can you tell us about the impact of tariffs? So we've seen the U.S. levy tariffs on steel and aluminum and some finished vehicles, but there are also threatened tariffs and tariff uncertainty.
Yes, it certainly is, as you said, put a chill on our economy. And we've seen a lot of hesitancy on the part of businesses, and I think increasingly on the part of consumers about spending. We aren't exactly sure how it's going to play out. We know our prime minister is negotiating with the Trump administration to see how our trading relationship with our largest trading partner is going to evolve. So I think right now, when we look at the data, some of it shows the impact insofar as we've seen a really sharp drop in our exports more recently. Earlier in the year, we saw a significant increase in exports to the United States as companies try to front run those tariffs. So now we have seen a pretty sharp slowing in that. One data point I think that really does highlight the impact that the tariffs could have on a persistent basis should they continue. Now, as you remarked, the CUSMA agreement allows us for some carve-outs, meaning not all of our goods going south of the border are actually facing tariffs at this time. And as long as we maintain that, I think that'll be a good sign. But probably it's going to take a few months for that to really filter into the economy.
Yeah, a lot of people that I talk to are worried about what trade tensions mean for their jobs, their livelihoods. What can you tell us about the impact on the labor market?
Well, so far, we have seen job growth stall. We had some very strong gains as we entered 2025, but that has really petered out. And specifically, where we're seeing job losses is in manufacturing. As you indicated, steel and aluminum tariffs, 50%, that is really having a significant impact on that industry, as well as the auto industry, where we're continuing to face 25% tariffs on finished autos. So this is having a material impact right now on the labor market. As long as this persists, I think there is some risk that we will see some of these job losses filter through to other parts of the economy. After all, if people in one sector have lost their jobs, they're not necessarily eating out, spending on clothing as they usually would have, and that could dampen activity in other sectors of the economy.
So we'll have to be on the lookout for that kind of ripple effect. What does your crystal ball tell you about the likelihood of a recession in Canada this year?
Well, we do think that we're probably going to experience a couple quarters of negative GDP growth, and it really reflects a few things. But in particular, I think it is all of the uncertainty that both businesses and consumers are feeling. As we discussed, the fact that Canadians are feeling less secure about their jobs. What does that mean in terms of their spending? What does that mean in terms of buying a home? We had been anticipating a pretty strong housing market in 2025. But with this uncertainty, that has put a damper on home sales activity. And that's unlikely to really come back until we know what exactly is happening with respect to these tariffs and how we really stand. So I think that's one of the things we're seeing is that uncertainty is impacting businesses who are not putting money to work, not hiring as much, and in turn impacting Canadian consumers.
Now, with the caveat that a lot can happen between now and then, what do you expect from the Bank of Canada this summer on the interest rate front? The next announcement on July 30th, and after that, we have another one on September 17th.
Well, we do think the Bank of Canada will lower the policy rate further at 2.75%. That's pretty neutral, I think, for the economy. And as we move forward, we think that we're probably going to see them move rates a little bit lower to help insulate the economy from all this weakening. But of course, it is a central bank that is targeting a 2% inflation rate. Recent data showed that the inflation rate is slightly below 2%, though underlying factors, some of them are running a little hotter than that. So whether or not they go this summer or in the autumn, we still think that there is room for the Bank of Canada to lower the policy rate, not a lot, we have another 50 basis points or half a percentage point in terms of getting that rate down. But that will be, we think, sufficient to help the economy regain its equilibrium.
So we have time for just one more quick question. What kind of economic impact do you expect from ongoing and escalating geopolitical violence and uncertainty in the Middle East?
Well, certainly when we think about uncertainty and the impact that it has on sentiment, on confidence, I mean, where it's coming from, it's definitely, I would say, a very uncertain environment, whether it's directly related to our biggest trading partner or globally. And that will, I think, restrain confidence and will restrain to some extent spending by Canadians and by business.
Thank you so much for your time and your insight. That is Dawn Desjardins, Deloitte Canada's chief economist.
Thanks, Anne.